On January 9, 2026, President Donald Trump summoned the world's top oil executives to the White House for a meeting that could reshape South America. Just days earlier, U.S. forces had captured Venezuelan President Nicolas Maduro, creating a power vacuum in a nation with vast oil reserves. Trump, joined by Vice President J.D. Vance and Secretary of State Marco Rubio, unveiled a bold plan. He wanted American oil companies to invest $100 billion to rebuild Venezuela's crumbling oil industry. The room was tense. Leaders from ExxonMobil, Chevron, Shell, and others weighed the risks and rewards. Trump described Venezuela's energy sector as decimated by years of mismanagement, but now open for American-led revival. He promised U.S. protection for any company willing to take the plunge, framing this as a historic opportunity. The executives listened, knowing their decisions could shift the global energy market and U.S. influence in the region. Yet, Venezuela's history of seizing foreign assets loomed large, making any investment a gamble. Trump assured them that American oversight would safeguard their interests. The stakes were enormous: immense profits on one side, the risk of total loss on the other. This meeting was the culmination of years of U.S. pressure on Venezuela, now entering its most aggressive phase. Trump's message was clear. America had opened the door. Now he wanted U.S. companies to walk through it. The question: was this a genuine opportunity, or a dangerous bet in one of the world's most unstable nations? The oil executives had to decide if they would follow Trump's lead into Venezuela's uncertain future. President Trump's pitch broke all precedent. He declared that the U.S. government, not Caracas, would oversee new oil ventures in Venezuela. Oil companies would negotiate directly with Washington, sidelining the Venezuelan government entirely. To ease concerns, Trump promised total security for investors, hinting at financial backing from agencies like the U.S. Export-Import Bank. He outlined a new profit-sharing formula. Funds would go first to the Venezuelan people, then to the investing companies, and finally any surplus to the U.S. government. This arrangement positioned the U.S. as both gatekeeper and beneficiary, a move critics likened to economic colonialism. Trump argued that only American control could prevent the corruption that ruined Venezuela's oil sector. The plan was a radical overhaul of international business norms, replacing direct deals with a U.S.-managed process. For oil executives, this was both a safety net and a power play. Trump insisted this was the only way to ensure Venezuela's oil wealth would be used for recovery, not lost to graft. The industry had never seen an offer like this before. Despite Trump's assurances, oil executives remained skeptical. ExxonMobil's CEO Darren Woods bluntly called Venezuela uninvestable under current conditions, recalling past asset seizures under Chavez. The scars of billions lost and years of legal battles made companies wary of returning. ConocoPhillips CEO Ryan Lance noted his company is still owed $12 billion from previous expropriations. For these firms, no promise from a single U.S. administration could replace the need for lasting legal protections. The industry demanded ironclad guarantees, written into law, not just spoken in the White House. The risk: a future Venezuelan government could tear up any U.S. brokered deal. Oil investments are long-term. Political stability and the rule of law are non-negotiable. The capture of Maduro changed the landscape, but not the underlying risks. Until Venezuela's legal system is reformed, big oil sees more danger than opportunity. The memory of past losses is too fresh to ignore. Chevron, the only U.S. major still operating in Venezuela, took a measured approach. Vice Chairman Mark Nelson said Chevron would stay, but not commit to massive new investments yet. Instead, Chevron plans to repair and optimize existing wells, aiming for a 50% production increase over 2 years. This incremental strategy lets Chevron test the waters without risking billions. Years of navigating Venezuela's turmoil have made Chevron cautious but resilient. CEO Mike Wirth's plan is to build slowly, focusing on achievable gains rather than sweeping transformation. Chevron's experience gives it an edge, but also a deep sense of caution. The company's approach stands in stark contrast to Trump's call for rapid, large-scale investment. The American Petroleum Institute echoed this caution, stressing that security and rule of law must come first. For now, Chevron's slow expansion is a reality check on political ambitions. The conditions for a massive influx of capital simply aren't there yet. Venezuela holds the world's largest oil reserves, over 300 billion barrels, more than Saudi Arabia. Decades ago, it was a powerhouse, producing 3.5 million barrels a day. Today, the industry is in ruins, crippled by corruption, mismanagement, and nationalization. The state oil company, PDVSA, was gutted as political loyalists replaced experts. Infrastructure decayed, output collapsed, and Venezuela now supplies just 1% of global oil. The result: economic ruin, hyperinflation, and a humanitarian crisis. Experts estimate it would take $30 to $35 billion and several years just to restore pre-Chavez production. Full modernization could cost $184 billion and take a decade. The challenge is staggering, far beyond simply drilling for oil. Trump's plan asks U.S. companies to rebuild an industry from the ground up. The scale of the task is daunting, with no quick fixes in sight. Venezuela's oil wealth is a paradox: immense potential, but nearly impossible to unlock. Trump's plan relies on direct American control of Venezuela's oil. The U.S. Navy has seized oil tankers and imposed a quarantine on Venezuelan crude. Seized oil is being sold on the open market, with proceeds held in U.S.-controlled accounts. The administration claims this ensures funds go to humanitarian aid, not corrupt officials. Trump argues that U.S. management will fight corruption, stop drug trafficking, and lower energy prices at home. Oil companies are promised a secure bubble protected by the U.S. military and Treasury. The message: invest without fear. America will shield you from Venezuela's chaos. This unprecedented level of control is Trump's main selling point to wary investors. Whether it's enough to overcome industry skepticism remains to be seen. Trump's Venezuela strategy is as much about geopolitics as oil. He warned that without U.S. intervention, China and Russia would dominate Venezuela's reserves. Both countries have poured billions into Caracas, deepening Venezuela's dependence. The White House sees this as a threat to U.S. influence in its own hemisphere. By inviting American companies in, Trump aims to push out Russian and Chinese interests. Secretary of State Marco Rubio frames this as a modern Monroe Doctrine: no foreign powers in America's backyard. For oil companies, this means their investments are tied to a larger geopolitical contest. The stakes: not just profit, but America's global standing. Environmentalists warn that reviving Venezuela's oil could be a climate disaster. Most reserves are extra-heavy crude, among the world's dirtiest and most carbon-intensive. A 2024 study found Venezuelan oil produces more greenhouse gases per barrel than any other major producer. Ramping up production would undermine global climate goals. The oil would be refined in U.S. Gulf Coast communities already burdened by pollution. Critics argue the plan sacrifices environmental justice for short-term gains. They call for diversifying Venezuela's economy, not doubling down on oil. The debate isn't just economic, it's moral and environmental. Venezuela's oil future hangs between Trump's bold vision and industry caution. Trump wants a $100 billion U.S.-led revival, promising security and profit. Oil majors, scarred by past losses, demand real legal reforms before investing. Chevron's slow, incremental approach highlights the gap between political ambition and business reality. The industry prefers steady progress over risky bets. No amount of U.S. guarantees can force companies to invest if they don't trust the system. Environmental and social concerns add further complications. The outcome depends on more than politics. It's a calculation of risk, reward, and responsibility. The world is watching to see if Venezuela's oil can be revived, and at what cost. The next chapter will be written not just in Washington, but in boardrooms and communities across the globe.